Morning, Jamal. Morning, Matt. It's up to you, Victor. Jeroen? Jeroen? Am I saying that right? Welcome, man. I think you're new, right? Didn't you just join recently? Yesterday or today? Good to have you here. Normally our calls are on Tuesday, but I had to postpone that one for to hang out with my kiddos before they went back to school. So I appreciate you guys being flexible here. All right. Let me share the screen. All right, let me know if you guys can see that. What's up, Florian? How are you, man? All right, so let's see. What do we got going on here? What is GU even doing? We've got basically a bullish front leg, and we're just trading up, it seems. Obviously traded through this leg, traded through this high at this point, and we're just pushing up. So we can map this front leg from the pivot. This PA got a little choppy, but I do think, because price traded back into this break theory level, kind of developed a little bit of a high, kind of farted around for a bit, but I think we're just going to map that as part of that. And then we have kind of this guy here. We have this inside bar where there might have been some setups for longs here. This high is still intact, which is great. Gives us reason to trade higher. So really just waiting for price to come back in here and five pro trend to the upside. That would kind of be the ideal scenario for GU at its current state. What's it doing right now? I mean, this was, what was that, retail sales? Yeah, core retail sales. Honestly, this was a pretty significant move for retail sales. It tends to move the market, but this is pretty big. There's also GDP this morning at 1 o'clock. I think it's this. Nope, where's that? It's somewhere in here. I didn't really do much. And then we still have something tomorrow morning at 1 a.m. retail sales. I mean, I didn't think retail sales would be this crazy today, but I guess we'll see what it is tomorrow. Morning, Matthias. As it stands now, I'd like price to trade into our 4-hour break theory before we even start looking for longs. I, kind of where we're at now, we're in a little bit of no man's land. Obviously, pro trend front leg to the upside, so it could shift from here and just kind of go. But we got this huge leg down. I don't generally like trading with large wicks, but we have this kind of large kind
Oh
of.
my fucking God, this girl, man.
Okay. Is that you, Greg? You good, dude? Greg. Yeah. In order to take the stairs, we need to see another sweep. Not quite. If we break the M5 again and we get a new M5 break theory, you have the option to look for a brand new setup, which would require the sweep. Or if the M5 break theory is kind of within that original hour and 15-minute window still, and the mitigations are looking good and you have the stairs and it makes sense, you can get involved. I think more often than not, you would see that when the M5 breaks, um, kind of without like a ton of volume. Like it might wick the highs or it might body close just a hair and then kind of trade back down into the mitigations and then go. So it's okay to wait for a new setup. Wishing, can I mute you? Sure. I don't even know. I think you're already muted. Wait, I don't even see your name in here. margin. Oh, I got you. All right. Yeah. So, as it stands now, I don't think we have anything super significant in terms of like structure. We have a bit of substructure to the upside. Kind of looking at this seems to be really just kind of part of this one leg to the downside. He's just skimming this area, which kind of sucks. Would be nice if it came into this level here, but if we have potential substructure to the downside, we'd basically have to trade from the 5 minute into one of probably this guy here. So, and then it'd have to set up to the downside. I'm not really too interested in counter trend trading, but I mean, you guys know that. So we can I'll put an alert here just to monitor it. Let's look at NASDAQ real quick though. Yeah, we're just kind of mooning. In the 4 hour perspective, again, kind of a bullish front leg. We're still within, yeah, we're still within this overall bearish leg, but I think we can assume that it's going to continue this bullish front leg. It's been moving pretty heavily to the upside. So as it stands here, ended up being a sweep, right? We don't know that ahead of time. That could have just been a continuation of the downside, but it traded higher after taking the low, so we qualify it as a sweep. And I think this is actually bouncing off this giant range that we're kind of trading here. Not that we have to necessarily map it, but that to justify this move, I think that's what's happening. It's just trading off that giant range because all the imbalance. So we have price just kind of trickling up and then ultimately committing here, which had a lot of movement, but not a lot of opportunity for us to get in. And now we're kind of sitting in this level here. So interested to see what'll happen here at these highs at this kind of part of the range with all this imbalance. But I think kind of like GU, I think we just have this new kind of front leg to the upside here that we're trading within. So from an intraday point of view, if we get continued, it's already moved 140 points. So right in session, it's been about 60, 70 points. So if we get continued movement to the upside, then we can look to kind of follow that flow and go from there. GU though, I'm not sure how I'd want to play this yet, to be honest. I think some people took some net. Did they? I saw somebody taking something today this morning. I think it was GU, was it? Yeah, Steven, me too, man. Oh, it was gold. That's what it was, Matt. And I think Perth took GU short or something. No, he took US 100, NAS 100. Okay. Oh, you took the short. Oh, you took the short in here. Yeah. Yeah. Let's see. What's gold look like? I feel like from London, it looked pretty good. This absolutely sold off though. There's a 4 hour. Just took out this high, up to the downside. I have a front leg to the downside here. It's pretty rangy. Lost 111. Would you take on the winner? What was the return on that? R wise? Oh, Weixing, you're Perth. That's confusing. I didn't know that. Yeah, that's fair. We can need to add gold to this here, actually. Sorry. So, Well,
Hey everyone, good morning.
glad you made it. What's up, brother?
Hey, I'm here. It's little bit late, but better late than never.
Yep. How's your morning going?
Everything is okay. I just went to coffee. I don't know. Near with my house, I have a Starbucks, but I start to hate Starbucks because coffee is really suck. And I opened to myself like coffee bean. I don't know. Do you have this one or no? And that's it. I fell in love in coffee bean.
The company's called Coffee Bean?
Yeah, yeah, yeah.
Oh, okay. No, I just I try to make my own coffee at home because every time I go to like somewhere like Starbucks or something, I just get pissed off at the menu. I'm
Yeah.
like that old crotchety dude who gets like I can't handle the different menu items and be able to order something that I actually want. I feel like I always order something. I'm like, what have I ordered? And it's never good.
Bro, life
Good.
is harder. Yes, it's not training, bro.
Can't do it.
Yeah, I agree. But yeah, I don't know. Previously, I think I don't drink coffee so much. For example, like here, because in Russia we always drink tea.
Um,
Yeah, it's like tea culture. But here, everywhere, like everywhere, and everyone drink coffee, hot coffee, cold coffee, every time only coffee.
yeah, coffee is huge. I mean, I feel like I drink a lot of coffee, but there's people that I used to work with, like when I was in the consulting business.
Hmm.
I had people who drink coffee probably like 5 times a day. I thought I drinking it once a day was not. I thought that was a lot. I
Yeah,
just drink
I
it once a
agree.
day, but some
I
people are
agree.
crazy.
I too use only one.
Yeah, I
How's your
wanted
family?
this, and then you
Everything is
like
okay?
didn't get it. What's that?
How's your family? Everything is okay?
Yeah, man, kids got had their first day of school yesterday. So today they woke up knowing they had to go back to school, and it was kind of hard to get them going.
Okay, one question. So, did you do this dance what you shared in the Instagram?
What Dan? Oh no. No, actually, you know what I did, dude? I sat on my chair and I read a book for about an hour. The first time I read, like, started reading again for all summer. It was nice, just peace and quiet for 2 seconds.
Okay, congratulations you. Good time is coming.
Yeah, nah, my dancing days are over. Uh, yeah, Tywell, dude, waiting for that 4 hour break there to get hit for longs just to get missed. Dude, the volume on GU is just kind of, you know, not playing nicely. I mean, it still could get hit. It's just kind of, we got to sit through a bit of a range first. I don't really want to, but we, we kind of go through these like weekly cycles where before it actually does anything, it sits like in a range for like 7 days. Well, this is two. Previously, that's like 3, 4 days, like 4 days. It tends to do this before it goes 4 days. This is a longer one, 5 days. It eventually goes. We just need to survive the chop. 6 days. And then everything that moves the market is just news. It's just like trying to get involved at the right times. Trying to stick to those pro trend ones. Like all you can really catch, like you might not be able to catch this, but catching this, you want to try to get involved in as best as you can and just rip it when it hits. It's kind of the idea. Always freaks me out when my lawyer texts me. I don't want to look at it. Yeah, it's kind of. I was saying. I was kind of saying this to shit. I can't remember who. Maybe it was Ronald this morning. Yeah, I think it was. It's different, right? Everybody's coming from Phantom for the most part, or something similar to Phantom, where there's an idea of an edge being taught, and you're taught like the broad aspects of why the market moves, and it's kind of disguised as an edge, and then you find yourself being able to make up a trade idea for every single move that the market presents, and that's not really a great thing because usually ends up in a strike rate. Losses are kind of hard to understand why you're taking losses. And winners feel like luck a lot of time. But then when you have an actual edge, like where it's specific to what you're looking for, when it hits and when it plays, the idea is once you have that kind of confidence and you've got it down pat, when it does play out the way it's supposed to play out, you hit it hard, you hit it often, and you manage it well, and then you wait for the next thing to kind of set up. But when you have this specific edge, you find yourself in situations where sometimes it's not presenting, sometimes it's not presenting for a couple of days, sometimes it's a week or two, which sucks, or you miss the one that it does set up. Like when the volume kicks back in and kind of we get out of these summer months and stuff, we're going to go back to seeing the edge play out in a way where we're getting at least 1 to 2 opportunities a day just in New York session, right? That's kind of how it works. The summer months, just they're generally a bit slow. They've always been a bit slow, no matter what kind of edge you use. But it's kind of the hard part about transitioning into more of a specified, systematic trading strategy is that we have to now kind of peel back some of that impatience where we kind of built some bad habits around being able to justify every single move of the market and getting in everywhere at all times, to doing it more in a like really selective kind of manner, and it's tough. It's pretty hard. It's pretty tough. Giving you PTSD thinking about it. Yeah, dude. The checklist for a phantom setup, there's like every reason to take a trade, but then every reason to also not take the trade. It's just super confusing. Super confusing. It's like you could convince yourself at any point in the day to say, hey, there's a setup, but then in the same breath that there is no setup, or that you need additional confluence, and then it's brutal. So many branches of the plans. Yeah, I know. Well, it doesn't help that there is a lot of coaches, a lot of different views on it. It was tough because everything I read this out loud just for people that are watching the recording, by the way. It was tough because everything that I asked about a losing trade, which happened a lot, the answer was always, yep, I can see why you took that. It's not wrong technically. Yeah. Or if it fits your plan, right? It's rough. It's rough. Well, so it feels nice to know what to wait for. Like I feel way more professional now. When you have like an edge like this one, and sometimes again it doesn't work the way you want it to, and that's kind of partly the market's fault, partly also a lot of us are still trying to learn it and try to piece it together and try to peel back some of the aggression, being a little too aggressive on, let's say, our M1 commitment. Maybe it's substructure is not what we need. We need more of a proper M1 structure break to find our commitment and all that kind of stuff. Or we need like a good break to the upside on the M5 rather than just some like weak wicks or something to the upside. It's not necessarily a hard rule, but trading it enough should give us enough data to say, hey, I know this works sometimes, but I don't really like this, so I'm going to be a little bit more selective and wait for like a strong break, something like that. But when you have like, hey, 4-hour pro trend move, like, is it in the pro trend area? No. Do I still want to trade it? I can make that decision, but I sure shit wouldn't do a counter trend, right? I'd try to say, hey, look, we're not in a 4-hour break theory level, but the M5 is shifting up and I'm in session. So let me see if I can capitalize on a pro trend move. I won't necessarily aim for any like crazy levels. I'll just manage it at a fib level because I know that I'm being slightly aggressive, and that is probably better for me to just take my profits and be happy with the day. So it's like between the management side of things and then the actual edge, it's pretty important to, have that stuff kind of pre-planned and kind of know what you're getting yourself into. And it's easier to do it when you have what I would consider like a very simplistic like edge from a visual standpoint. Like the pattern is super easy to recognize. And I think that's one of the benefits of this is like when you look at the M1 at, a previous community and what kind of like trouble that gave people versus the M1 here, It's funny because the M1's not the issue half the time here. It's sometimes the M5. People don't know how they want to view the M5, but the M1's not necessarily a fear anymore. It's like when you have a specific thing that you're looking for, and the order of operations is I need demand to hold first, and then I look for liquidity. It all of a sudden it just makes the M1 not so scary anymore. So it's kind of nice. The problem with Phantom is that I don't know when I win a trade if it's skill or just luck. It's too subjective. You know. Well, it's hard to be consistent with that, right? The more you kind of, you know, put something in place that's repeatable, the easier it is to find that consistency, and then easier it is to like kind of address the losses. That was like my biggest thing. It's like if I don't know why I lost a trade, then do I actually have an edge? Do you have any idea how many trades you're taking on average on one pair per month, per year? I know it's hard to pinpoint. So when the kind of market is shaping up again, so end of July, early August hasn't been great. There's not been a ton of kind of opportunity, and to be fair, I've also been a bit occupied with the kids. I haven't been like fully immersed and focused in the market, so I may have missed some stuff. But when the market's shaping up during the school year and stuff, what I was seeing in just New York session for just GU, I was seeing at least 1 to 2 setups, like trade ideas, and then within that there might be scale-ins, so that's a little bit different, right? So like I might have one trade idea that has 2 scale-ins, and you know, you can consider that trade idea or whatever, but or actual trades, but I kind of focus more on the trade setup itself. So I'd see 1 to 2 trade setups almost per day or every other day, and that's kind of what we're hoping to get back into. You know, but that, to be fair, that's not considering fully pro trend moves. That's also considering counter trend moves. So keep that in mind. I don't really trade the counter trend moves, but the setups are there, if that makes sense. If it was just purely pro trend, just 4-hour break theory, that's going to reduce. It's just going to be lowered, but that's going to have the highest probability for the best rewards. But if you're trading pro trend, but you're not in a 4-hour break theory, that's obviously going to increase your likelihood of catching an opportunity. But there's also just a greater likelihood for it to trade against you. But at least you're pro trend. And then if you trade counter trend, there's more opportunity, but the likelihood of it succeeding is a lot lower. And then the profitability, like the reward side of it, because we mostly TP at sandbag on counter trend, everything just gets a little bit lowered. So the perfect setup for our break theory, 5-minute clean breaks and break theory, and then the M1 commitment with some scale-ins, that's the best scenario ever, right? And that's what we all kind of aim for and hope for, wait for. But sometimes we have to do it outside the 4-hour break theory, but we still want to be pro trend. And then the counter trend stuff, that's like totally a personal kind of thing if you want to do it. But the more you kind of look at those 3 kind of avenues, the more quote unquote trading ideas or setups that you'll get per session. So, you know, take that with a grain of salt. Yeah, Steven, the M5 is the tough one now. You know, that's the one that everybody's got to kind of reel in a little bit, try to figure out the best way that works for them. Like, are you okay with what type of break? You know, like they're all going to work. A wick break will work because it shows intention to the upside. It's just a matter of the data that you're gathering in your session, your trading window specifically, and if that type of break on the M5 is something that you're interested in. If it's like a really weak break to the upside, like just a wick that's like a pip or 2, I'm usually not too interested because, again, I'm measuring the intention. And if the intention is like pretty weak, yes, there's a break through to the upside. Yes, there's intention on the upside. But if I'm going to trade it, my M1 commitment has to be nearly perfect. And I might not get in immediately. I might wait for a scaling opportunity. Because a lot of times what will happen is, you know, the M5 might not look the best, but the intention's there. I feel good about the direction overall. But then the M1, we get the M1 break, a demand hold, and it breaks up once. And then it comes against us, right? So that's what that's why I tend to, want to wait for just that commitment to really set in stone. I might not wait for like 3 or 4, demand holds. I might wait for that second one kind of thing. Did I cover GU? Sort of. I'm just kind of looking at this, but overall, I wanted price in this 4-hour break theory area here for continued higher highs in this new front leg that it's forming. I like that the 4-hour target hasn't been touched yet. I just don't know what it's actually doing, and a lot of that has to do with this giant candle right here. So I'm just monitoring this. We do have kind of like a substructure. I wouldn't even call it substructure. We got some break theory levels to the upside, but overall, really bearish in this candle. So not sure what I want to see, or not sure what I know what I want to see. I just don't know if we'll get it. Do you think that it's the M5 though, or that's tough for the H4 for being unclear? For me, I'm more unclear on the H4 side. I'm happy with validating a wick break and a confident PT move. If the H4 is shit, like GU's been, then it's just a head spin. So, good point. When I come to the charts and I'm doing my outlook takes all of 2 seconds. I look at the H4 and either I have a clear direction and clear like where I'm trading to and where I'm trading from, or I don't. And if I don't, it's very unlikely that I even like get involved in the market. If my 4 hours a mess, I'm not interested. I like clean 4-hour PA because at the end of the day, if I know that my 4 hours clean, not only does it provide good results from the technical standpoint, but it also gives me a lot more confidence to actually execute the trade. And everything I try to do is based on what is my confidence level for whatever this setup. And if we go into the 4-hour break theory level and the M5 is up, my confidence just grows and grows. But if we're ranging on the 4-hour like in here, and we're kind of in this leg and I'm not too satisfied with this low going and I'm not really sure what direction it's trading in, I'm not really getting involved in this. And we break this up, now I feel a little bit more confident. We haven't hit the level, but if we were in here and the M5 shifted, my confidence level would be pretty high and I'd be a lot more likely to like want to risk my capital on it. So that's kind of like being that selective kind of thing. Can that H4 candle before inside bar form a break theory? This guy? Yeah, I mean, technically, yes. But again, it's just a matter of how confident are you? If I have a fairly clear structural level with a break theory here and then a break theory level with, a candle that fails to break the high by like just like a couple pips, I'm probably going to put more weight onto this, and maybe I'm wrong, but and the other thing too is like for me to want to play this level, I'd essentially have to start creating some actual M5 structure to play from here, like more clear substructure where I actually have some spacing, or breaking the main high here and then going from there. And then of course, if I do that, we've already hit the 4-hour high. So now I need to kind of assess, is it going to continue up, or like, is it going to possibly pull back? If it stays bullish, then it's not an issue. I can trade it long. But if we get this one little dip to the downside and then we trade up, then I'm asking myself, like, we're taking highs, taking lows, what are we actually doing here? Those are the questions that we gotta, kind of answer when it actually pops up. But for entries, we need liquidity sweep plus break of structure. Then we enter on the pullback, right? Yeah, so order of operations would be break of structure first. So, well, demand hold first. So like if we're looking at it from let's say this is the M5, right? This is your M5 break theory. The M1 needs to look like this. So this would be the pullback here. So it'd be pulling back. We'd come into the break theory level. And what I want to see is demand hold first, break, preferably like the main M1 structure. That would be the ideal scenario, right? So you'd have demand, and then it would break something. And then what you do is you say, hey, why did it break? And then I can look to the left and I can say, well, it took out the liquidity from something, in this back leg here, right? So now my order of operations is demand holds first, because that allows me to very easily and very quickly visualize the setup forming. If I look for liquidity first, I never know if it's going to be, this point in the leg, that point in the leg, this point in the leg, this point, or even the low itself. I have no idea ahead of time. And to say I know ahead of time is bullshit, right? So I need to be able to say, well, why did demand hold? Like, oh, there's liquidity here. Perfect. What, did we break something? Yes. Cool. So now I can use this level as my entry and then go from there. So that order of operations is really important. I never look for liquidity first. It's always demand first, then justify why it held with liquidity after the fact. And if it holds and the liquidity from the back leg doesn't make sense, then I say this trade doesn't work. Or if there is no liquidity but demand held, then I say this low is probably getting taken, so I don't want to get involved. So that order of operations should keep us out of a lot of losses by doing that. After we stage for target, what would you need to see to take a counter trend trade? Would 1 5-minute clear break be enough to look for that counter trend trade, or would you look for multiple N5 breaks? So one break to the downside would not suffice, because how many times have you seen, price, let's say this, H4, and now this is the M5, and we do something like this, right? It looks great, but then what ends up happening a lot of times, we end up just kind of going back up. So what I try to do is I try to wait. If I'm going to take a counter trend trade, one, supply holds, we got to break to the downside, and then it's going to either give us substructure N5 movement to the downside, kind of confirming that it wants to trade lower, or best case scenario, we break this low, and then we can trade from this break theory level. And then if the M1 sets up, again, it's got to be perfect, then I can do that. But I'm only ever going to take my sandbag targets on a counter trend trade. So one break, not enough. Multiple breaks, best. M1 has to be clean. And then go from there. But if we do any of this stuff on the counter trend, like such, and then, or even if we hold this, but we keep trading up, I'm just gonna keep trading long, keep following the trend until we are told otherwise, right? And that usually requires multiple breaks to the downside to be confirmed bearish.
Brian, can I a little bit disturb you? Can you show GU H4? I have one question. Look, if you remember yesterday we spoke about this area and this area, yes? My question is, look, now I'm looking to your charts, and what I see like you show this line, so for you it's like upside moving, yes?
Yeah, front line.
Yeah, but my question is like, if we're gonna talk about structure, how we said yesterday, structurally it was break level like here. So am I right or no? My question is like, if we if we switched to bullish movements, yes, but it's only first break level. Probably maybe we need to wait when price do something like this, and after to work to buy position. I mean, like it's like what we talked about previously, cause maybe now it's like no man's land, cause we can't say now we bullish or bearish, cause we have one structure break here, but in general movement was in downside. And my question probably more about structure. What do you think about this?
So I mean, the biggest thing is like, we have to understand like how are we qualifying this going here? what does this mean to us? And we have to kind of just make a decision and then follow what happens after. So the problem here is that we have this high that technically formed this low because we had this break, but this didn't break here. So it held, and then you have this high.
Yes.
The problem with waiting for this is that you have now essentially written off this, saying that this doesn't count, so that's not the high.
Yes.
And if you do that, then you have to say, well, what's happening with all of this? If this isn't my high, then what is this break to the upside? What is this break to the upside? What is this high? Is my pro trend longs or is it shorts? And I would rather look at the data that's directly in front of me and then follow what's happening after. So what I'm seeing is we took this, which this is a high that formed that low. When it took it, what happened after? We didn't keep trading down. We didn't stay within this range and trade down. We had a lot of opportunity to, but ultimately we just kept forming higher highs, right? So because of that, that's going to give me a lot more confidence to say, you know what, I think we're done with this. I think this is the back leg. We're just going to trade what we see in the front leg now.
Okay, I got it. I got it. How you think? Cause I think only one issue, it's like for people, it's how we can identify this. Give me a second. This low, cause firstly, I saw for this low like liquidity, like when we made some lower low and after we took it. And at this moment we just reverse, and for me it's always been like just liquidity grab, and that's it. But yeah, I think it makes sense too, Okay.
But the thing with liquidity is that we can't justify it ahead of time because we have to ask ourselves, is it intention to the upside or is it a liquidity sweep? If it's a liquidity sweep, then what it's going to do is it's going to trade the other direction, which in this case, we don't know ahead of time that that's going to happen. In a live market, it's going to take this low, it's going to pull back, and then we're going to take this high, and we're going to say, is this a liquidity sweep or is this intention, right? So what's the difference? The difference is we were previously trading bearish, but all we can do is say, okay, let's just see what happens. And then we trade up, we trade down, and instead of committing to the downside, which would have said this was a liquidity sweep, we traded to the upside, which means this was a liquidity sweep.
Yeah.
So from there, we use that information to justify why it keeps trading up, but we can't anticipate it ahead of time because we're just guessing.
Yeah, okay, I got it. Yeah, I think it's makes sense. Okay, thank you so much, because I think it will be useful for a lot of us.
Yeah, absolutely, man. So, Joven, off-topic question about how you used to trade previously with this demand and reaction and supply and control by blah, blah, blah. What ultimately caused you to stop trading that way? So, the biggest thing for me was simplicity. Looking at the students and how everybody was trading at Phantom, and a lot of the stuff that I brought to the table for Phantom was to fix a lot of Phantom problems. Traders were talking about specific issues they were having, getting caught on the wrong side of the market, managing trades prematurely, looking for reversals in basically the middle legs. So catalysts for pullbacks, internal range liquidity, external range liquidity, you name it, whatever else concept that was out there. A lot of them were used to patch holes in a boat with a bunch of giant leaks. So when we take the model, right? So let's say, for instance, you had this, and then you had a supply reaction here, and then whether it sweeps or doesn't sweep, and it trades up and it trades back down, right? What I've essentially done is I took the old model and I've overlaid, I took everything that was kind of already there, and I looked for the most simplistic way to find the actual entry. So just the basic aspects of it. So if you look at the setups that are trading, that we've been trading, and the ones that work, you'll notice that it's actually the same thing. We just don't have to mark up a supply hold and a demand move. We don't have to mark up really any of the other stuff. We just simply say, you know what, instead of focusing on catalysts for pullbacks or internal range liquidity, we say, let's just focus on the front leg. We don't really care what's happening here anymore. Instead of saying, hey, let's look at a supply hold before the demand move, let's just look for intention where we have structural movement and commitment to the upside. So now instead of doing all that and waiting to see what happens with supply, demand, whatever, I simply drag a line that tells me pretty much everything I need to know. What's my intention? What's my direction? Okay, now when it comes to commitment, the M1 side, demand hold. Before we used to anticipate liquidity ahead of time. I've changed the order of operations and look for the most simplistic way to get confirmation of the actual move. So if you take the flip theory and all the other stuff that was kind of there to find entry, and you find a setup here where it works out, you're going to you can overlay the old stuff on top of it and realize that it's actually the same. The only thing is I've stripped everything back so that way you don't have to confuse yourself. You don't have to look for a bunch of other nonsense, and there's a lot more structure behind it. So that's kind of the idea. It's not so much that I mean, clearly it's changed, but it's not to the point where it's like I've completely revamped everything. All the PA is obviously the same. We're all looking at the same charts, but the idea was, how can I provide something simple that isn't so foreign that provides good results? And this was kind of what it was. Would there be any particular reasons you would look for a 1 minute substructure break instead of breaking the main structure on the M1 entry? I've noticed so far all my losses have been due to trading substructure in 1 minute instead of waiting for the main high low to go. Yeah, so substructure versus main structure on the M1 break. There are times in a pro trend move where everything looks great and is perfect, and you have the only option you have to get long is substructure. If there's an M1 structure level that is like somewhat close, like if, let's say for instance, you kind of do this, you get your demand hold, right? But this M1 main high is really far away. There's a lot of reason to say, you know what, I'm just going to get involved on this kind of M1 substructure because everything else is perfect. But there's a lot of times where that M1 level is not that far away, and it's like right here, and there's a demand hold, and we're still looking at pure substructure moves. That I don't really understand. I do think it's just a patience thing. But even in a pro trend move, if you have an M1 structure here, you just wait for it. And then, you can wait for the scaling opportunity if you want more confirmation. But generally speaking, I think there is a bit of an issue with overall patience. And I think that has a lot to do with just the market hasn't been providing a ton of opportunities lately. So the substructure is like, ooh, substructure pro trend, let me be aggressive. There are certain aspects of that aggression and that pro trend move that you kind of want to get accustomed to make sure that you're doing it the right way. And a lot of it has to do with that overall volume and that kind of M1 structure, and whether or not it's realistic to actually break that M1 main structure. And then you just kind of have to just say, you know what, it's worth the risk, and then go for it, or say it's not worth the risk, and then, hold off. But that's kind of the idea. When looking for entry and there's no more liquidity to take, should we wait for liquidity to form and sweep, or does it get invalidated? So when looking for an entry and there's no liquidity, as in the liquidity doesn't exist. Like if I look, there's plenty of liquidity here. Let's have an example. Let's say price came, let's say there was a 5-minute break there, price came up, came down, it reacted to this, but it didn't commit to the upside at all, and it stayed here. Now there's no more liquidity here, right? So if there's no liquidity there, then I have to ask myself, okay, if demand holds, why is it holding, right? There's no liquidity, this was used up, am I satisfied with that? So then I have to ask myself, okay, well, now where's my liquidity? Well, I've got potential liquidity here, but what does that mean for the overall trade idea? If it takes this low, I've now taken out kind of the low and given intention to the downside for my M5 level, which doesn't really give me a lot of confidence that it's trading up anymore. So I tend to ignore that. You have an additional option where you might find, you might have a low kind of formed within here, and then we take the low, take the high, and then we come back, and then we take this liquidity, and then demand holds and it continues up. That is an alternative option. to use as liquidity. Something in the back leg is going to be much better though. It's going to be higher probability. Like a lot of times it's just like a single little sell candle in a buy leg that tends to give the best results. And if it's not available and we have to kind of generate new liquidity, it tends to it reduces the probability of it working out slightly. It still works, but it's going to reduce that probability a little bit. But so yes, if there's no liquidity, if it's already been used, you can technically use liquidity that is formed kind of in the front leg, if you will, or kind of in that middle area where the spacing is, and then go from there. But Steven, you got your hand up. What's up, man?
Hey man, how you doing?
I'm good, dude. How are you?
Always good, thank you. I just have a question on the H4 quickly. But I want to preface it with I just want to yeah, anything is, oh yeah, showed you. I've got an example as well. I just want to draw on chart because it might just be due to overthinking like front leg versus expectational order flow and a complex pullback. So
Sure.
let's say we have a bearish move and then we have like a big push to the downside, but we have this H4 break theory. Then of course, if we see a front leg playing to the upside, then this would be substructure. So we'd play the substructure longs into this zone and then we the shorts again, right?
Yeah.
Okay, so then if we have just a big push to the downside and we just keep on doing this, we just play the front leg right. And I think NQ is throwing me off a bit with this
Yeah.
right now because we're in this, but there's nothing clear in here. So we just keep on playing the intraday front leg until we see a shift, until we're wrong.
Yep. For the 4 hour only though. I wouldn't do that for the 5 minute necessarily.
Yeah, for the 4 hour.
Yeah. Because the 4 hour, each high and low that it makes is essentially giving us intraday direction and target. It might be wrong overall. We might, maybe we're not trading up at all. But if I have 4 hour highs to aim for in the immediate and recent price action, that gives me reason as an intraday trader to have a target. So I'm going to trade that structure, that substructure, that front leg. That's gonna be something that I want to get involved in. It's kind of like I don't know if there's a good.
I've got an example back here on 16 June. Yeah, right. This price action.
Yep.
Right here.
Yep. Yeah.
So we had this small pullback.
Oh, sorry. Go ahead.
No, it's fine.
Yeah. So I mean, and that's just it, right? So you had this big old leg, you had this kind of front leg form here, and then you had this guy. Now, obviously, price hasn't gotten to it yet. And from a 4 hour intraday perspective, we kind of held this low, which is whatever. It's information. We don't care too much. But then we traded up. We didn't get to this level. We traded down and we held. I'm not trading this long, and I'm not necessarily trading this short, unless I'm considering maybe that this is my substructure level, which is possible and it's totally fine if the M5 sets up, the M1 sets up, right? But as soon as we make this higher and then we take this out after holding this low, I now, from an intraday perspective, have a new 4 hour high that was formed right here, which means I have a 4 hour break theory, which means if I get M5 set up here, I can now target this high, right? And we happen to then make it into here and then we can get short, whatever. But from a 4 hour perspective, I'm not really doing much here. Not really doing much here. I'm not doing anything here. It's just the fact that I get this. Now I can look in here to target this. And it just happens to make it in here and trade down, right? That's a bonus.
So if we traded into well, what now? If we had these break theories, do we look at this or do we look at the front leg forming?
So what we should be doing is we should always have a pulse on the overall main structure, right? For expectational order flow from that sense, know where we could trade from and where we could shift bearish. And then when we start looking for the kind of quote unquote counter trend intraday 4 hour front leg trades, right, that happen to be substructure, we can then say, okay, I can take this, I can target this or target above, whatever, makes sense. But when I get here, if we then get here and trade long, I can go long. But if it goes short, I need to be getting short.
Okay.
Sense?
Yeah,
So
that
this-
makes sense.
Yeah, we have to be of both minds, looking at the overall level, but being able to play this intraday stuff. Otherwise, we're going to end up sitting on our hands for, a full week, which
Yeah.
really means taking unnecessary losses, right?
Okay.
Trying to force a narrative like, oh, well, it's running short here. Well, it's not in the break theory level. Do we actually want to trade that? Maybe, maybe not. How do we manage it? There's a lot more questions, a lot less confidence. But then when we hit this, a lot more confidence to go short. When we break this, a lot more confidence to go long. All from small intraday perspectives.
Okay, awesome. Thank you. I think I just confused myself looking at everything.
Yeah. I mean, that's
But I
fair.
understand. Thank you.
Yeah. This particular PA is good for this example, but there are times when it's just sideways shit.
Yeah.
There's not really much answer to it, like this. Like, could you trade a technically quote unquote, well, I guess this would be more of a pro trend move, but you start to creep up, right? These are little things that are going to, well, maybe not this one, but this one here, definitely, right? And these little buy sell wicks. This might be information to say, hey, look, we're going back up. Let's get involved. Or maybe we're not convinced that it's bullish for whatever reason. And it's just a substructure play like this. It's not always going to look super clean like this. And it's not always going to come into this level and then actually go short. Sometimes it's going to just keep trading through it. And we just have to say, hey, look, I'm going to capitalize on this the best I can. I'm going to understand that it should run from here, but if it doesn't run from here and it keeps going up, then I'm going to keep getting involved. And it's kind of like you said, I think NQ is doing, just that. Well, at least
Yeah, I was just about to ask on NQ. Can you go to NQ quickly?
Mm-hmm. Sorry, I thought it was for a second.
So on NQ, where's my thing now?
Big old leg though,
Yeah. So this is the break theory, of course. So all this, well, not that really. Say there's this because it's like a nice cleaner pullback. So all this is just information to trade the intraday pro trend longs, although it's like counter trend overall.
Yes.
Okay.
Yep. Same idea. As long as the 4 hour is basically saying, hey, I'm making higher highs in here. And this got a little funky, but overall it continued up, right? And then we got here and I was like, I really want to get short. And then I don't think anything set up and then it traded higher. I was like, okay, I am wrong. Let's just follow the front leg, right? It is really just about, saying I can be really biased when we get to this level, but if my data keeps showing me otherwise, I need to switch. I need to shift.
Okay.
It's super
That
important.
makes sense.
Yeah, because even this first one, like when it rejected from this level and didn't actually commit to the downside, it doesn't mean that it won't do it eventually. Maybe it needs a little bit more whatever to get back down, right? But if the H4 keeps showing higher highs in this level right here, when we did this is still right here. But as soon as we broke that high, I was like, shit, I really want to get long now. Like, I just want to follow this because I think we're just trading up. And I will just, at this point, when I make new front leg to the upside through what could potentially be or should potentially be a bearish level. Somebody yawning.
Brian, your lection's so funny.
I'm always gonna call people out, man. I mean, there's somebody earlier.
Guys.
Like,
I was just yawning.
somebody's getting pissed off at the girl earlier, and then I've got them yawning. I had Vlad snoring like one of the first couple calls. Vlad was literally snoring on a call. I was like, dude, what are you doing, man?
My bad. First time back on a live call here.
Hey, good to have you, dude. Good to have you. What time is it for you?
It is 8, so I just popped on quite late here.
Yeah, 8 a.m.
Yeah.
Yeah, that's an appropriate 8 a.m. yawn. It's
like
it was a stretch. It was a good
yeah, that's exactly what it was.
But yeah, it's like the big thing is just what is the data saying for today. So like if I'm showing up and it's like we've done this and I'm doing my outlooks and I'm saying, okay, what am I doing today? Right? I just broke this high. I have 4-hour pro trend move. There's a very good chance that if the M5 keeps pushing up, I'm just gonna get involved. So it really is about, like, we look at this data in hindsight, and I don't know if you're doing this, but I do this sometimes, and I have to kind of actively remind myself, like, I'm seeing a lot of data. This is like 4-hour candles. Each of these little 1 or 2 candles is a session, and I need to be fully aware of that. And from an intraday perspective, as a day trader who's just getting in and getting out within a couple hours, all I really care about is what is happening right here. That's all I care about, right? I don't really care about all this. It's good information. It gives me more confidence for the rest of this. But from an intraday perspective and actually executing a trade, this is what matters most. I broke this high. So can I get long, right? So that's kind of how we want to look at it in the broad picture.
But still staying mindful, of course, of the overall structure.
Yeah, for sure. But you know, at this point, when we keep pushing these highs like this, in order for me to get bearish from the 4-hour perspective, I'm going to need some actual substructure. I need to start seeing it shift. I need a new front leg at this point. If it went from here, no problem. But now I'm probably going to need like actual front leg to the downside for me to actually want to get short. Because I think if we look at it based on what we know from just how price likes to kind of reverse through volatile kind of moves, what does it do? It kind of V's out, right? And then it just keeps going. I'm kind of pissed that I'm not long from like down here. So we'll see. We'll see. There's a lot
Brian,
of.
Okay, cool. Thank you.
Is NQ setting up? That's a great question. I have no idea. Shit, maybe. Am I satisfied with this break to the upside? Yes. Hold on, let's see. I definitely have. So this is the other part, right? That people tend to be a little too overzealous on, is that subtle demand hold. Price trades down, it trades up, and then you get a sell candle. Is that a demand hold for you? I like the obvious ones, so I'm gonna wait for this, right? This clear sweep of that level, whatever it does. Does it sweep this too? No, doesn't matter, right? It really doesn't matter as long as it does something. Now the question is, I'm satisfied with this kind of little sell candle going. It's a bit of a pause. I wouldn't consider this totally substructure. If this was all unbalanced candles to the down like this, right? This is substructure. This to me, a little bit better, not so bad. So demand holds, price trades here. We another break to the upside. This is inefficient, or sorry, this is efficient. This is inefficient. So good chance I'll probably just, well, let's see what this actually is. Yeah. Now again, once I kind of map the M1, I want to look at everything again, make sure I'm making a good decision here. We are pretty high up in the leg. From the M5 perspective, this isn't the best break relative to some of this other stuff. So I want to make sure that I'm not catching like the exhaustion point where it's like, all right, we're kind of already done what we've done today. So that's the stuff I'm considering. And then the M1 I think the M1 looks good. So if it comes back, you can get involved. It's such a chore though, trading NQ with all these, God, funding things. I got like 5 platforms to execute on. Somebody entered. All right, I've got. I loaded up 20 accounts on Apex. I don't know if that was a good idea. I feel like I'm doing too much. I can't lie. I've got Alpha, Apex. I've got, what's this one? The other one, Top Step.
These 20 accounts gonna be nice. And you got the copy as well, so that's should be nice, should be fine.
Yeah, got the copier, but the problem is it's all on Tradeovate, and some of the settings, even though I'm signed into different accounts, some of the settings keep pairing over. So I need to be really cautious not to over risk on some of these accounts.
You take 20 of the same size accounts. Oh,
What's
yeah.
that?
If you take 20 of the same size accounts, I guess it'd make the most sense.
Yeah, well, I mean, I guess they're all 50K, so it's not a huge deal. Except for the freaking Darwin X account, that's $1 million account.
How's your Darwin account going? Are you still trading this
I
alongside?
yeah, I haven't really been trading it. It's sitting at like 8% profit. But it's been sitting at it for like a couple weeks.
Okay.
Yeah. It's but I have to trade, what is it, 12 or no, 15 trading days before they kind of give me like the whatever ranking or assessment or whatever they do. I have no idea. I keep forgetting about it, to be honest.
Brian, when you trade with a huge account like 1 million, your position open for like from first time. I mean, when you wanted to open your position, can broker excuse your order, like use it, or you need to like I don't know, couple position only for your full lot size, for example. If you
Yeah. So it
if you
depends,
don't.
right?
Uh-huh.
Yeah, it depends on kind of that risk. So how expensive is the trade? Like if I have an area that I can get involved in and
Mhm.
trade, with a 10-point stop versus a
Yeah.
20-point stop versus a 30-point stop, that's going to determine how much risk I can put on. So I can trade, usually it's one mini contract,
Mhm.
but if the stop loss is bigger, I need to go to the micros and I need to trade like, 5 or 6 or whatever contracts are those. Um, which is kind of nice because then you can partial if you want to, but if you just trade one contract,
Mhm.
you can't partial. So that's something to consider.
Yeah, I think it's like a little bit hard to work with so huge accounts, like little bit not useful. Okay, not,
Well,
not
it can be a little confusing and a
yeah.
little difficult because when you copy trade
Mm-hmm.
with Tradeovate using group management,
Mm-hmm.
you can't place a stop loss or a take profit. You have to manually manage it.
Mm-hmm.
So it's a little, a little worrying if I'm being honest, but because I also don't like watching my trades. I like setting alerts and walking away because I have a really bad habit of over managing if I'm watching it. So by not being able to set a stop loss, I have to watch it. And Apex also has a trailing threshold rule, which basically means if I'm $1,000 in profit,
Mm-hmm.
and then even though, whatever, my break even's here,
Hear me?
it comes back, it
Mm-hmm.
counts as like $1,000 of loss.
Yeah, yeah.
So it's
Sorry,
kind of, you have to trail it. You have to like, once you start breaking out, like
my
immediately
computer still
trail it up.
set it on to play videos.
Jonathan, what is going on?
I think, yeah, I think somebody's just unmuted. Can't tell.
He's speaking not with us. Yeah, I agree.
I guess.
Oh, good. You are good.
So on when you work with this account, you use break-even, yeah?
Say it again?
When you work with this type account, you use break-even too, yes?
Yeah, it's it's kind of it's different
Mm-hmm.
because the rule set kind of forces you to, which is fine. I don't like it, but like currencies, I wouldn't do it, but with futures, I feel like I kind of have to. I don't know. Still trying to figure everything out on the future side, to be honest. Oh, a new, much cleaner break theory. Best to keep the original or wait for a new setup. Do you mean the current PA? Like if, because did this. I'd probably just have it come back to this for now. If it kind of breaks parabolically and then resets up, then that's different. But I mean, that would require it to kind of like float above and trade above here and kind of ignore this, and then we can get involved. So I'd have to see what it kind of does, but I like this one. Oh wait, the other thing too, right, that I've been liking is throwing VWAP on. As long as it holds above VWAP, that's also usually a great sign. So, and this is good. It's bounced off and it's holding, so it's a good sign. What is your well? So the high, I'm not too concerned about. What I'm concerned, or what I'd be curious about, is my fib levels here. So if we start pushing fib levels before we come back, then we have an issue. Then I probably am not going to trade it. Yeah, the VWAP video, like just real quick, I can do a VWAP video, but the VWAP video is your break theory, the low of that break theory in a long setup. You just mark it at the low. The settings are all standard. I've just turned off all the lines, right? And then really what you want is price to just trade above it. That's it, in your direction. So if you're short, obviously you want to trade it below it, and you'd map it from the M5 high of the trade idea. But what would happen, the only caveat is that if it trades below, you need it to trade back above and then hold and then go. If it trades below, there's a good chance it's going to stay below. And that's a good way to stay out of a bad trade. But that's pretty much it. That's all I do. Yeah, it's nice because I like averaging price, kind of like I've said before, it's like I like squeeze price and I average it. And this is like a tool that actually averages price. So I don't have to be kind of more of an estimation. This is like actual data. So I can use that nicely. I wish I had it for GU. What is GU? Yeah, CGU's now with the high. And it hasn't done it really well. So what I'd like to see, if GU is going to set up something like this, set up and then go, but I don't really know what it wants to do, to be fair.
Brian, and today is my day, bro. And quick question again. Can you show 1 minute gold, please? I just want to ask about something.
Yeah, just quickly, I want to monitor this one. What's up? 1
minute? Yeah, 1 minute. Look, 1 second. 5 minute break level, 5 minute break theory line is here. And my question is, look, here's my liquidity, here's my supply, and we took it. And my question is, when when price show this lower low, after price come back, we show this supply, and now we start to react. My question is, look, you prefer to wait clear direction when price broke this level and after you try to find the entries, or for example, if price start to do something like this, go up and from here go down, break, but it's not main break level. Yes, it's like break substructure in this current PA. And my question is, what do you prefer, work with substructure, or you wait when it will be like clean break level? What do you think?
So, I mean, I'd prefer main structure, but if you have, like, for instance, in this case, my real question is, are we looking at the break theory? Are we choosing the right break theory level? That'd be my biggest question. But purely from the M1 perspective, is if we have supply holding here, we've taken this low, which is, it's data, it's not necessarily the biggest thing, but we've had supply holding here, we're satisfied with the sweep, right? Then in this case, if it's pro trend and everything else makes sense, you could use this level to get involved, because basically supply held here, it gave substructure break to the downside. This would be okay. Like, I'm sure it'll give a reaction,
Mhm.
My biggest thing again is the actual M5 area the right area?
Mhm.
Like, is this the break theory? Is this the break theory for the substructure? I'm leaning more towards this,
Mhm.
but same situation, right? We have huge leg to the downside,
Yes.
and it's substructurally pushing to the upside.
Mhm.
And then the 4 hour, I think, is short. Kind of can't tell.
4 hour, it's not good. It looks like we took liquidity from here after we go down some supply and after
Yeah.
current
And then
PA.
we already took this low as well
Yeah.
here. So yeah, I think overall I'm not sure. I think that would be probably not something I personally would get involved in just
Mhm.
for yeah, just unless we continue to push to the downside, maybe get more confirmation. I don't think it's wrong necessarily. I just think there's not enough data for me to be confident in
Mhm.
taking it.
Okay, so for example, if price start to go down and start to show us, for example, like break this level and more commitment, yeah, more commitment, and after this you can consider like, okay, we can go down and trade it, yeah.
Yeah.
Okay.
Um, yeah, just that, and that's only because I'm not sure. If I wasn't sure, or if I was more confident in the move itself, then I wouldn't need all that. But
Yeah. Okay.
looking for additional commitment to kind of give me more confidence in the actual move, that's kind of the way I would do it.
Okay, I got it. Thank
Yeah.
you.
Yep. All right. What do we got going here? Trade over. I think I'm missing a window. All right, hold on. M5. Less than one. M5. What time is it? 10:27. What time we start this call? 9:30? 9:20? Later, man. I hope you have a good one. Yeah, VWAP on NQ is a great confluence. It's kept me out of a lot of really stupid trades. It looks good from the M5, but if you get an M5 break theory paired with the VWAP and it looks good, it hits well. I don't know how summer months work with NQ, but it's been great so far. I'm curious to see if it picks up during the actual year. That'd be interesting. If it picks up any more than this, that'd be a little nutty. ES. Wait, what? Oh, it's about the same, but it's a little bit different. ES is kind of pumped. At what point would you stop trading continuations if price reaches a target and then just continues to move further and further? If price reaches a target for a particular trade idea in your trading window that you kind of got, then it's kind of like well, that sucks, and you kind of move on, wait for the next day. However, if it hits target and the M5 structure is still clean and you're still breaking to the upside and you're still getting good clean break theories and the M1 is recommitting, you just kind of reset everything. Just go from there. If NQ picks up even more, G will start looking really mid. I know. I mean, to be fair, the currencies always suck in the summer. That's just kind of the way it goes, unfortunately. What if it's the next day? Would you continue trading the M5 structure in that direction? As in like the 8. Oh, hold on a sec. I don't know if I want to trade this. Good deal. Just give a sec. Don't like this. Don't know what that's about. This little break is fine. This is decent. Might. Do I want to wait? Demand hold, sweep. Breaks this as well, so that's good. Let's see what we get. Hold on, you gotta adjust my risk on like 50 million account schemes. Which one's this? Let's give it a go. Maybe a little bit more risk than I'm on, but that's all right. Where's my return? I wish I could what do you call it? Copy from this account to my other trade accounts. That'd be great. What time is it currently? 10:31. What if it's an XA? Oh yeah, what if it's an XA? Would you continue trading the M5 structure in that direction? A good example would be on July 10th, 4 hour. August, July. Oh, like where are we? Like this leg, this down here. Oh, sorry. Well, I'm looking at down there. July 10th should be the same area. Oh yeah, where it's just like parabolic, it's just going up and up and up. Yeah, if you get M5 setups and it's still just trading up and you're getting like no like movement to the downside, just get involved. Just get involved. It's okay. You just have to understand that there's no real 4 hour target for you anymore, and you don't really know where it's going. So manage it fairly aggressively. You can still use, your standard, your stretch targets because it's a pro trend technically. You have to keep in mind that this particular move, like this leg, is a little bit unprecedented. If you go back in time, like a couple of years, you're actually not going to find a lot of instances where the 4 hour didn't come back this many times, right? We got one here. I think a lot of us capitalized on the long here, but this is pretty rare. It's pretty rare. So just keep that in mind. So you look, yeah, as long as it's pro trend, you have a very good, like high level of confidence in the overall direction of price from the 4 hour perspective, and the M5 is kind of clear, like it's doing kind of what you want it to, it is really about that level of confidence. But I think the underlying issue is like, hey, if I don't trade those, how long am I going to sit in my hands for? Am I going to be missing out on these pro trend moves? Like I should have just done this. I should have done this. And sometimes it's better just to take a loss and be like, okay, I gave it a shot. It's fine, But a lot of times it's going to provide those winners, but it takes a lot of volatility in the market to produce something like this, which usually it's going to look like this, and you're not going to really get that too much. But you can keep it in your arsenal and kind of keep an eye on it. All right, let's see, what's this thing doing? Pumping, baby. Figure out some alerts down here. Oh shit, what have I done?
Ryan, how did you get those small lines to get there where you are?
Which
Or
ones?
on your on trading view? Because mine, I entered the trade as well on Trade8, and mine just says sell stop, sell limit,
Oh,
and as an arrow.
An error?
Arrow, sorry.
Oh, arrow. Sorry. If you well, maybe it's trade. It's because it's just trade station. Not sure. But
Oh,
if you click on your thing, it should say stop loss TP, right?
no, mine just says sell limit and sell stop.
Yeah, watch. So if I close my bracket out, oh yeah, see it goes to sell limit if I do that.
Oh,
You
okay.
you gotta be really careful of that because if you leave it on, see I get stop loss TP,
Oh yeah,
but this is
I
trade.
think
This
you
is
get that.
trade station.
Okay.
But the sell
Okay.
limit, buy limit is gonna close out your order. That's kind of the idea.
Yeah. I'll just keep monitoring it as well.
All right, guys, I'm gonna let this go. I don't want to sit here and watch this. I think it's time to get off anyways. Oh, sorry, there's two more questions. When we use the demand hold as a stop loss versus when do you use the area that swept the liquidity? It kind of depends on the overall stop loss size. More often than not, I'm looking to use the demand area if hold on a second. I'm sorry. I just realized I bought the wrong contracts on this account. God damn it. I'm only going to use that demand area if it's coming from like a range, like a window of imbalance. So if I have like this big window of imbalance or just large imbalances on both sides, price comes up and then my demand holds and then there's an entry here. Often I'll put my stop loss here. But if the rest of this is pretty efficient and you just have like just your typical kind of setup, whatever, and this is my sweep, then there's a good chance I'm going to put my stop loss down here. Does that make sense? Hey, Brian, how do you deal with overconfidence if you run into a string of wins? Sounds like a good problem to have. I had a string of wins, now followed by a string of losses. Oh, that's not a good problem to have because of dumb trades looking back on it. Jeez. I forgot to take the thing here too. Good God, man, I'm all over the place. There's too many trades. That's a good question. I don't know. I gotta think about that one. What I tend to say is if you are on a winning streak to keep hitting it until you've taken that loss and then take a break. Um, the way I kind of see it is like, if you're trading or if you're like a pro athlete or whatever and you're on fire, you don't stop. You kind of run up the scoreboard, right? And it's kind of the same thing with trading, but up to a certain point. Missing a basket in basketball is not going to, hurt you that bad, but taking a loss um, isn't that bad either technically. But if you start doing it over and over again, you got to get back in the gym kind of thing. You take a break. And it's kind of where I would say you probably need to go on it. Like if you what I guess your string of wins are you talking about like in a single day, a couple weeks, like a couple months? Like how long is this winning streak and then how long is this losing streak? Over a week. The losing streak is over a week? Or both? Oh, the winning streak and the losing streak was both over in a week, a span of a week, is what you're saying? Sorry, I'm feeling dense. Yeah, I mean, 2 weeks, 1 week. Oh, gotcha. Okay, gotcha. Okay. Yeah, dude, honestly, just once you kind of go through that winning streak, assess those losses, make sure that you're doing the same thing. If you're forcing the trades through shitty PA just because you feel like you're doing well, that's kind of a big problem. Because it's the kind of problem that eliminates all of your results that you work so hard for, and that can really kill your confidence. And then for a lot of people, that may cause some like revenge trading and other issues that you don't want to just get into the habit of doing. So take a break, assess the losses, and just figure out what the key factor for your winning trades were and try to see what the difference was between your winning trades and your losing trades. Because maybe it's just one thing. Like maybe the H4 just started sucking and you thought you could trade through it, and that was a bad idea. I'm not sure what it was, but that kind of general idea. I mean, if you want to, you can say what it was if you figured out what the kind of losses were. Like, why were they dumb trades, I guess. What is the shortcut to this symbol? Yeah, NQ. You can just type in NQ, and then you got to drop down this arrow, and you're looking at the September contract. So NQU 2024. And we'll probably switch over to December at the end of November.
Brian, sorry, I just want to ask you quickly. When do you shift over from September contracts to the next month contracts? Is it every quarter?
Yeah, it's quarterly. And you'll do it basically a week or two before. And the best way to do it, Jonathan showed me this, which is probably the best way, is if you look at bar chart. Oh, hold on, I have got it. There's a specific. I'll send the link in chat here. Just bookmark this. But you'll notice that it tracks the volume in these contracts. So right now we're in the September contracts. You can see, right, the volume is at 300,000 basically. And the people are actually trading this right now, which is kind of wild to me. Maybe it's something I don't know about, like banks or whatever, but what we'll see towards as we get closer to December is that we will start shifting the volume. The volume will start to taper off here, and this will start to increase. And basically when this has more volume and whatever, we can get involved here. I think the rule of thumb though is basically, and this is what my dad does, like 2 weeks prior or the last Friday or something like that for the second week before the actual rollover. That's when he starts trading the other contract.
Okay. Awesome. Thanks a lot, man.
Mm-hmm. The H4 being a little confusing, explain it well with the order flow and the structure. Yeah. Honestly, man, if the H4 doesn't look good to me, I'm not interested. And that's not the same thing as like, hey, look at the H4, it's parabolic, it's like going through the roof. That looks fine to me. I'm not too worried about that. It's really just like when I'm sitting in and I show up and my day looks like this, I'm not interested. Or on GU for that matter, like this. I don't want to get involved in this crap. But as soon as we break the high and we're, pushing with some volume, just because we're above the level, it's not the best. It kind of sucks a little bit to miss out on some of that move. But if we have that volume, like this, we can capitalize a little bit. It's kind of nice. But if it's sideways and it's super wicky, just like the M5, I don't want anything to do with it because it just indicates a range, indecision, highs and lows going all over the place, tight PA. You don't want to trade through it. Don't want to trade through it. Week of August 1 was nice, and yeah, I know. Summer months, maybe. Again, I really don't know because this is all assumption. It's just pattern. That we get a lot of this crap. Oops. Just the sideways BS. But sometimes it's fine. Because like if we look at GU, and again, my summer months are a lot different than most people's, but I was already on summer break here. This was July. Really strong moves to the upside. Not great from the 4-hour perspective, but even then here, it's like we had a bit of range, but decent moves to the downside. Like there was a good 4-hour breakthrough here, broke this low as we should have. We had a good 4-hour breakthrough here. We broke the low as we should have. We got a bunch of little kind of like little substructure movements to the upside, and eventually it committed to the upside. And then it was like good volume, just not a lot of opportunity. And then this is what I mean. Like, look, it's bearish. Obviously, we can see it. We can see it's super, super bearish, and that's great. But overall, it you know, it's pretty sideways. It's pretty rangy, and I think that's just. I think maybe next year in August we go take a cruise or something. Actually, I lied. You'll never find me on a cruise, but I'm terrified of just being in the middle of the ocean with a bunch of people I don't know that are gross and sweaty and sick. Is that just me, or do people love cruises? I feel like people love cruises. I don't know. Can't do
I've
it.
been on like I think it was the end of my matric year, like my last day of school, and me and a few mates went on one. It was like our age group of people going. That was pretty fun, but I won't do it again. It's too
You
many
don't
people,
do it.
too close quarters.
Me and my wife always joke that when the kids are old enough, they're out of here and stuff, we're gonna go on a singles cruise and just like go people watch and pretend like we don't know each other. It'd be fun.
Nice.
TP for NQ is at the fib levels. Yes, that's sandbag, and because of challenges, I am practicing breaking even at the sandbag. I can't do that on these other ones though, which is why I can do it on alpha. Let me do it on alpha. Let me be a responsible trader. Break even. I can't do it on Tradeovate. And to be fair, what's that sandbag? Yeah. What's my M5 breaks are a bit mid, but that's okay.
Are you gonna hold to the stretch, Brian?
On my personal, I may do that, or at least one of the things I'm practicing, and this is mainly for the prop accounts. I probably shouldn't do it with my personal. I probably should just let this run on my personal. But on the prop accounts, I'm working on trailing, but I don't really know how I'm supposed to actually do that now that I think about it.
Okay.
Huh. Because I can't actually drag a stop loss on.
Really?
Yeah, when I
Oh, yeah,
copy,
you can-
it's because I'm copying.
Okay.
You have to put a sell limit, right, for the same amount of futures or contracts.
Can I do? Oh, let me just see. I would like it. That seems to be. So I could do a sell stop. That would be it, yeah. I just one of my biggest fears is because I keep seeing it and it keeps happening is that sometimes it's not a TP, it is a limit order, and then what it does is it closes my position and puts me into another one immediately. I'm like, what the hell? And I can't tell if I'm just doing something wrong or what I'm misunderstanding. So I'm trying to be a bit cautious here.
Future stuff is really nice. I'm really liking it. I think that's why I'm
I know.
overthinking H4 and GU the whole time.
Well, when it does clean up, just get
Yeah.
involved, hit it hard. But when it's not clean, it's easier to just be like, you know what? I can go look at NQ. And then if
Yeah.
NQ is nice, I can trade it. If both suck, then I guess I'm done for the day. But you know, are there scalings? Yeah, I just kind of want to. I just don't like how the M5 is breaking. I don't know if I feel confident in if it pulls back deeply. That's not great because I think we're petering out a little bit. You know, we've kind of exhausted a lot of this move, so I want to be cognizant of that and try to be, you know, responsible about how I trade it. I also don't want to overmanage it. You know, if I wasn't sitting here watching it, I'd just be ignoring it. Are there any features where you can demo? I think Helly's on a demo. Is Helly in here? I don't know if she is. Thought she was, but maybe she had to go.
Hey, Brian,
I'm pretty sure you can demo. Yeah, go ahead.
was the question about demoing futures?
Yes, please.
So
Jonathan's like my resident
the
futures
best
expert.
way. Sorry, I'm out cutting the grass. That's what I thought I heard. The best way is to just do the paper trading through TradingView,
TradingView.
and then just
Okay.
buy the CME data for $5 a month. And I mean,
Yeah,
it works exactly the same. Like, there's hardly any spreads and all that stuff. It's not like trying to find the best, FX demo, have the
There you go.
right spreads or whatever. Yeah.
Is that what Helly ended up doing?
Yeah, I told him about that after the fact.
Okay.
But yeah, that's what they're gonna do.
Yeah, data. Yeah, the data is really not that bad. It is a subscription thing, but God, I mean,
Yeah,
I'd
you
rather.
can buy for a year or for a month. That's like $5 for.
Yeah, I wish I could subscribe to a centralized data feed on Forex. God, that'd be amazing. I hate how much brokers play with the data. It's just when you're trading futures or currencies and you're only trading currencies, you think about it and you get a reputable broker, and it's really not that big of a deal when you're in it. But then when you go to futures and you realize how great it is to trade a centralized data feed and what that actually means for the spread and the executions and everything else, you're like, holy shit, like it actually kind of sucks trading currencies with the way brokers kind of do the data. It's like you kind of don't realize it's like getting out of like a really toxic relationship or something. You like look back and you're like, what the hell was I thinking?
People love toxic relationship.
People love pain, I think.
Yeah,
I think
yeah. More pain.
people love pain. That's why we trade, right?
Yes. 100% is the reason why I came.
Blood for
But
punishment.
I came in your community because I wanna grow, and don't feel more pain,
Well, what do they say? No pain, no gain, right?
100%. No pain on 1 million account.
True.
I
You
want.
do have to persevere. See, watching this is excruciating. I don't want to watch this. I'm gonna like close it just because I'm watching it. So I'm gonna get off. Good call today, guys.
Yeah.
Look, what's tomorrow? Tomorrow's Friday. We got another call tomorrow. I don't think we'll go super long because I feel like between the advisory plus call yesterday, this call today, and then a call tomorrow, I feel like it'd probably be silly to go on a super long call tomorrow. I feel like everybody's gonna get sick of listening to me. I'm getting sick of listening to me, but I'm gonna run for now. I got a bazillion questions I have to answer on freaking the My Funded Futures chat. They're gonna fire me.
Okay.
I feel like I'm not around. All right,
Okay,
I'm out of
guys.
here, guys.
Cool. Thanks,
Good
Brian.
session.
See ya, Brian.
Have a nice day,
Yeah,
everyone.
see you tomorrow.
Later.
Later,
guys.
everyone.
See ya.
Thank you.
Guys.